Welcome back into the currency space now, where the rupee retreats as RBI repo rate cut is seen as a short-term positive by the markets. More RBI rate cuts in doubt. The Indian inflation, fiscal indiscipline also continues to weigh onto the market. The euro also in the meanwhile has slipped on comments by Sarkozy that strong euro is hurting exports, and as market braces for Spanish bond auction tomorrow. The yen also falters as Japan trade deficit and easing is something that the market is keeping in focus. Let's go across then to Abhishekh Goenka. He is CEO India Forex Advisors and he joins us in Mumbai studios. Abhishek, hi, welcome to the show. Let's start with the Indian rupee first. And yesterday, of course, there was some euphoria after that surprise rate cut. But today we are more or less back to around those 3-month lows.
That's the market is giving us a clear cue where it's going. I mean, just before the policy, we didn't say rupee too strong. And after the policy, I mean, we wrote one article for Economic Times, your channel only, that there'll be 30-40 paisa respite, and then probably the macroeconomic fundamentals will take cue. And I think now it's definitely heading towards a 52.5 or maybe higher, you know, because the market is giving its own cues. You know, it corrected us slightly. In the morning, the markets were up, the Sensex were up, then again it went down, the European markets are down. Overall, we are seeing risk aversion in the global markets, and rupee is following the simple course up. So I think it's a clear trend, and I think 52.5, 53 is on the cards.
Vijay, what's your sense? 52.5 is the level we have been chatting about, but 53?
Manisha, I would agree with 52.20, 52.25 as a near-term level. I would watch how the traders are basically building up positions thereafter. But I'm pretty much in agreement with my friend here that the rupee is clearly weak. It's on the ropes vis-a-vis the US dollar. And any kind of decline, I've basically seen a very simple setup appearing here. Anytime you see the rupee strengthen vis-a-vis the US dollar by say 0.5% or 0.75% for 2 consecutive days in a row, the third day itself you buy the US dollar and you get a big smart move up. So it's basically telling you that the markets are giving a clear indication of a long dollar short rupee kind of a trade on every decline. So I think 52.20 is fairly achievable target in the absolute near term at all.
Well, there are lots of domestic problems here, but the euro also declined quite sharply, and saying that euro is strong and is hurting exports. Abhishek, how would you read that one?
Yeah, euro definitely is heading below 1.30. I think the consolidation between 1.30 to 1.34 has been quite some time now. And the way things are internationally, we maintained that in the first half of 2012, the US dollar and the dollar index is going to be the clear winner. So I think euro, I think it's just a matter of time when it's going to break the crucial levels of 1.29, and we're going to see at least 4 or 5 big figures going down. And that's the reason why we are also saying that rupee may not be going very strong. But despite the fact the dollar index is not able to break 80.81, the rupee is heading on to 80.52. So what happens if euro goes to 1.25? Then probably rupee goes weaker.
So as you pointed out, Abhishek, the dollar and the dollar index could be a clear winner into this one. What kind of levels are you working with on that one? I
think dollar index, I'm looking at 82 plus in the first half of 2012. As with the Japanese yen is concerned, I think 76 is kind of bottomed out. For the Japanese yen, I think we are looking at 85 or maybe higher. Maybe another 3-4 big figures higher than 85, because I think the consolidation between 76 to 80, you know, the market has kind of got suffocated. Now it's got that fresh breakout. The QE thing is still on in Japanese yen. Things are not too great there. I think poised for an 85 soon.
That's where it's going. Vijay, what's your sense on the euro then? Because while the near term is something that 1.30 seems to be holding, but on a longer term charts, is 1.25 and levels below visible?
I think once 1.29 is cracked, the decline would be somewhat accelerated, and I would agree that the 1.26, 1.25 levels would come in pretty fairly rapidly, because then the traders would actually start to push to add their muscle onto their shorts. So I'm not really very gung-ho about the euro vis-a-vis the US dollar at this point in time.
So we are looking at selling most of those Asian currencies, the rupee, the euro as well. How about the commodity currencies, Abhishek? Because that's another space that's taking a hit.
See, I think the commodity currencies again take cues from China. Now, the way things are shaping up in the recent numbers we have seen in China in terms of growth, in terms of home sales and overall industrial production figures, I am not very delighted. So I personally feel if we talk about the New Zealand dollar or the Australian dollar, which are known as commodity currencies, I think at least 4 to 5 big figures down from the current levels. You look at the Australian dollar, it's going to 1.04, 1.05. It's again coming back close to parity. So it's actually suffocated. It's not able to go up. So I think New Zealand dollar and Australian dollar, looking at Chinese cues, I think it's going to go down. Maybe Australian dollar we're going to see below parity levels soon.
All right, Abhishek, we'll let you go at that. Thank you, Vijay, so much for joining with us here. So not a very beautiful picture coming out in sense of the high yielding currencies, most of them on a declining trend. Buy dollar, that is your friend, is what experts are telling us today. With that, it's wrap on Hot Commodities. Thank you so much for watching.